Hi everyone, it's Marissa here from Rise High, Lachie here from Turner Real Estate, and we're here to give you another quarterly Adelaide property market update. We do this once a quarter to keep you updated on what's going on in the Adelaide property market. And Lachie here from Turner Real Estate is a knowledge bank, much knowledge. So Lachie, what has been happening in property over the last quarter?
Well, really since October last year, the trend has been a gross or chronic now undersupply of properties for sale, especially houses. So it's still a vendors or sellers market, particularly for houses. Why houses? Well, since COVID, people have a lot more respect and they value their private space more, and they want a bit of a yard, and they want a place to work from home. So that type of property has been really strong, and we think that 9% this financial year in the Adelaide market, so call it a 14% rise, so it's incredible.
That's really good, and I think that it's actually exceeded the national growth, because I saw a stat recently that national growth for the last 6 months nationally has been 12%, but we're at 14% for Adelaide. So
yeah, 14, and of course those figures are an average, so there's some states that haven't done so well. Victoria hasn't really done very well at all with their lockdowns, although they're better with their lockdown situation now. New South Wales is a market that's certainly going to go down. So Adelaide has been one of the stars. So if you look at it in the context of history, the historical growth rate, or average growth rate in Adelaide is about 3%. So we've just had a financial year of pretty much 14%.
Yes, which is pretty outstanding. And I like what you said about, it is true that people have reevaluated their living positions with COVID, and we've just come out of another lockdown in Adelaide. So people have realised how important their home is. And so that's, encouraging a lot of people to upgrade. I know that from our perspective, we're certainly seeing very high demand for people wanting to upgrade. We're also seeing really high demand from people just wanting to get into the market. So whether it be first home buyers or just people that are currently renting and wanting to get into the market and buy their own home. And certainly the government stimulus that we're seeing, like the first home loan deposit scheme, the first home guarantee, and the new home guarantee, which is supporting first home buyers and single parents, that is making, that's encouraging a lot of people to get into the market earlier than they would have normally. So are you seeing that demand is slowing down, or are you seeing that it's just staying really consistent and strong? What are you seeing in terms of demand?
Yeah, the demand is still extremely strong, but it's for the right type of property. So it is mainly for houses, people looking to upsize. There has been a little bit of a pickup in high-rise apartments, which have been very, very flat. So there's been a little bit of a pickup in activity there from buyer interest, which is good. Well-placed units with a courtyard, they're still fairly steady. They just haven't seen that rate of growth that we have for houses.
So it's really houses with a land, like with a backyard.
Yeah.
Would you say that's basically the criteria?
And just a bit more room, like a second living area, or a bit of a dedicated study, ideally, to be able to work from home.
That makes sense.
Actually, I've got a question for you, Marissa. One of the headlines I saw in the news just last week, and I think this is probably what's pushing the demand a little bit to buy, is that it's probably cheaper to buy and get a loan and own a property than it is to pay rent.
Absolutely. Like, it's never been more affordable because interest rates are at historic lows, and we are seeing that in many suburbs of Adelaide, it is actually cheaper to own than to rent. Yeah. So it's just a matter of whether people can just get over that deposit hurdle, which, like I said, the government incentives like the first home loan deposit scheme, the new home guarantee, and the family home guarantee for single parents, that's helping people to get into the market because it's actually not costing them more. In fact, we're finding that a lot of people that are currently renting, when they buy, their repayments are actually less than what they're paying on rent. So it is a really good time to buy, and interest rates are so low, money is so cheap, so that's obviously also stimulating demand as well.
And it's actually a pretty good time for investors for those reasons, because the demand for rental properties is very high. It's very much like the selling market. It's when we sell a property, there is a lot of interest. It's the same with the applications we get from tenants. So there's just really not much available at the moment, and sort of a good reasons a positive spin on that is that there's been some population growth in Adelaide, so there's a few more people looking for property. There's more interstate movement as well, and expats coming home. So there is a bit more demand, but that's pushing up rents.
Absolutely.
But of course, the interest is still low. So it's actually quite a good time for property investors.
Yes.
And we put on about 30 new managements just last month.
Yep.
So that's still a really strong part of the market. So if there are investors out there,
absolutely,
certainly with very, very low or short-term rates of vacancy.
The vacancy rate at Adelaide's at all-time low, isn't
high
it?
rents and very, very low interest. The yield's actually pretty good, and with a 14% growth in capital growth, it's all going quite well to own property.
We're also seeing a lot of interest from interstate investors into the Adelaide market, which is really, really interesting. That's really accelerated, I think, in the last 6 months, and I think it's because Adelaide's always enjoyed really good rental yields, and we've always had a really stable property market. And now that we're seeing that growth, and my question for you, Lockie, is that obviously we're seeing really great growth in the value of properties and, like you said, houses. We've always enjoyed a really good rental yield in Adelaide. So do you expect that the rental growth is going to continue? Because we already have had some growth in rental income for houses, but do you expect that the rental growth will continue so that those yields creep up to what they were, with the traditional values that we had pre-COVID?
Look, I think they will, because unfortunately, and it's actually a bit of a, for investors it can be good, but it's quite a serious social issue, is that there is a real undersupply of housing for the population of South Australia, and that's what actually makes investors or people that own investment property quite an important part of our society, because we really do need the housing. So in that respect, with the interest rates where they are, I mean, you've got to ask yourself, where else do you park your money? Do you buy a company and it could be high risk, or do you put it in cash? We wouldn't do that. Or do you buy shares, or do you buy property? So we're seeing the same thing with interstate buyer interest as well. We work with buyer agents who are based in Melbourne and Sydney that actually hunting around for their clients to buy property in Adelaide, and have been stable.
CoreLogic came out and said that we've had a 7% increase in rents over the last 12 months, and that's compared to a 6.6% increase nationally. So Adelaide's leading the way really on percentage of value growth, percentage of rental growth. So it's a really good news story for Adelaide, I think. And so do you expect this to continue? What's your expectations for the next sort of 6 to 12 months?
Yeah, so, well, maybe if I first mention rent, because that's just the current topic, is that I think it is a chronic shortage issue of property, so the yield will stay strong. They might rise a little bit as well, but I think we've already seen some rising in rent, so I don't know how much further that's going to go, but I think the vacancy rate and the amount of people that will be applying for properties will continue to be very strong. So yield should be good there. I can't really see that softening very much at all. On the sales front, I think the prediction is that with 14% growth this financial year, that it might slow maybe now that we're in the second half of this year, and they are predicting or forecasting probably only 6% growth next year. Because I think when a property rises that much, it's still very good. It's double the historical average. Yeah. So even though it's risen a fair bit, there is certainly some sentiment and feeling about people either, the horse has bolted, it's already gone up. But the problem is that it's not necessarily going to flatline or go backwards. It'll probably just keep moving. Yes. And not quite at the rate we've seen this year, but maybe about half that rate, 6 or 7%. Yeah. So awesome. it's still a strong market. And if you're buying, don't sit out if you can. And I know there's lots of people that are getting a little bit of fatigue as well. Yeah. They've been on the circuit a while, but just keep at it. Because if you want to own a property, that's an admirable thing to do, and I think you should really keep pushing at it and trying your hardest, and because it's not really going to go backwards.
I'd love to give our listeners some tips for buyers and sellers. So obviously we've had a series of lockdowns, and we've been pretty lucky in Adelaide, but we've just come out of a 1-week lockdown, and that impacts inspections and opens and all sorts of things. And like you said, supply is still a little bit low, so that obviously has an impact. What would be your tips for, let's do buyers first, and then also your tips for sellers in the current environment?
Yeah, well, I think what you ideally any buyer needs to do is set up their situation so they can buy a property unconditionally, ideally. If you're out there making offers subject to a condition, that's fine and perfectly understandable, and the most common one would be subject to finance approval. Yep. So obviously, clearly, you've at least got to have a pre-approval in place, and Rise High can obviously help you with that. But what's going to put you in an even better position is to, as I just mentioned, be able to buy unconditionally, so not subject to finance, waive your right to a cooling off period, and essentially be able to put yourself in a position to bid at auction as well, because lots of properties are going to auction. So that is the main thing that I would do. And then of course you just start looking, and there's various ways to do that. But maybe you can elaborate a bit more, Marissa, on getting yourself in that position of buying.
It's really interesting because a lot of the banks are just so slow at assessing pre-approval applications at the moment. So we also encourage anyone that's looking to buy at the moment to get pre-approval so that they can be in a stronger position when they are negotiating. And it's definitely something they should do. But what I would say is that if you are interested in buying, you need to get your pre-approval in place early. You need to start that process well before you're ready to buy, because with some lenders, if you want to get a good interest rate and a good deal, you could be waiting up to a month to get your pre-approval. There are other options that are a lot quicker, but they may not necessarily be the sharpest rate on the market or exactly what you want. So it is good to prepare and plan. We do have a lot of people that call us on a Thursday and say, I found a property I like, I want to buy it on Saturday, can you get me a pre-approval? And it's a little bit unrealistic to get a pre-approval in 24 hours with most lenders. So
we find the same when we'll get a call or an email or something from a seller and they go, I'm ready, and then we go there and we say, well, look, there's a list of jobs you need to do. So it's a bit similar in that regard, you just have to prepare and get yourself ready. And so at the moment, we're actually just going through the process of buying a building. Hopefully we can find one, because there aren't many around. But I've barely started looking. The first thing I did was I spoke to James at Rise High and said, right, mate, let's sort out all of our finances first. And so, because otherwise I'm not even really going to bother, because I need to work out my limit and I need to work out the interest rate, my costs and so on. So, I just think that's the first step, is just
line
critical.
up all the ducks, get everything in a row.
And then I think from that step, once you've done that, so it's like, what are the tactics that can be used? Essentially try and be unconditional if you can. And so, Marissa, perhaps you could elaborate on, yes, you've got your finance pre-approval, but how can you bid or sign an unconditional contract without a finance clause?
Yeah, well, I guess when you do have a pre-approval, it's not actually a guaranteed approval. So there is still an opportunity for the bank to withdraw the approval. So I think that, in order to be putting an unconditional approval, you have to be in a really strong financial position where that even if the finance fell through, you'd have an option to continue with the purchase. Because, of course, once you sign an unconditional contract, you're committed to that purchase as a purchaser.
And Marissa, isn't the biggest risk, so you've got your pre-approval set up, you buy a property at auction unconditionally, the biggest risk is the bank does the valuation and it's not at the level that you've paid for, or it might be a bit lower.
Yeah, look, generally that is the biggest risk. So the biggest risk is the valuation. So generally when we get a pre-approval, the only outstanding condition on the approval is the valuation. And in this market, if the property goes to auction, then the valuation risk isn't really a risk, because it's very hard for a valuer to argue that the price at an auction wasn't worth that when it is a pure market environment. So it's very unlikely that a property at auction would not be valued at what it is sold for.
That's great.
It might be more relevant for a property that's not sold at auction, where there haven't been comparable sales in the past to support it. And in a growing market, that is a risk potentially, because valuers use historical sales from the last sort of 6 months and their actual settled sales to actually estimate what the value is. And of course, in a growing market, historic sale data may not actually reflect the current value of that property. So that's potentially a risk. But there is actually, that's assuming that the applicant situation doesn't change. If, for example, after they get their pre-approval, something happens with their job, or something about their financial position changes, which can happen
Yeah.
in the current environment, then that also makes their pre-approval ineligible from proceedings. So it isn't uncommon that banks will do employment checks after the pre-approval stage. So there is a number of things that can change. It's not necessarily a guaranteed approval. However, for applicants that have a very strong financial position, very good savings, have a bit of time to wait, then...
and they buy at auction, so there's no risk evaluation.
That's right. And I think what we
strong.
encourage clients to do is, if they do want to do an unconditional offer, or they do want to bid at auction, and their financial situation is such that they are really relying heavily on this loan application, then we encourage them to negotiate a longer settlement time with the bank.
Yeah, okay.
Because if we're really confident they can get the finance approved, if we have that longer settlement time frame, it means that if this bank A, falls through, we have time to get Bank B on board.
Yeah, totally.
So, and it might mean that, Bank A will, go through fine, which means we might be able to bring settlement forward, and if the seller's happy with that. But if they give a longer settlement time frame, then it is a bit of a buffer to that risk.
Well explained, and I think that's just so important, which is the main tip that I'm expressing here this afternoon, is just to get your loan sorted out. Try and don't just shut down not buying unconditionally. Really think about it. Leave that option open. Don't exclude properties that go to auction, because they generally are going to be the houses, and they're going to be the well-positioned homes. And normally the auction properties in the market are the pick of the market, which is why they're taken to auction, because other people want them, which is why you've got the demand and why you've got multiple bidders. So, you've really got to open up your options when it's a tighter market, and you've really got to think whether you can buy unconditionally. But I think if you're safe and you feel comfortable and all the things that have been expressed here today, well, there's certainly some good reason to think about buying unconditionally if you can.
What percentage of properties would you say are going to auction these days? Would you have an idea off the top of your head? Now I'm putting you on the spot.
I reckon it's about...
It feels like a lot more than normal.
I think it's about a third of the market.
Yeah.
Which is probably fairly high. It's probably normally about a quarter historically.
The other thing that I'm seeing a lot of at the moment, which I haven't really seen much previously, is just put your best offer forward by a certain date. Is that a new sort of strategy that real estate agents are using?
Well, it's just the for sale method. It's just another expression that's used in it. So best offer by, or final offers, or closing date for offers, or whatever. So what the agent's trying to do is just instill urgency into the sale, or an end point, which is what you do with an auction date in order to get people to act.
So,
in
terms of like moving towards giving some tips for sellers, what would you say are some of the biggest tips for sellers at the moment, and what type of sales method would you suggest for different types of property or different situations? Well,
really there are only two methods of sale. One's a private treaty, which is the for sale method, which is what we just talked about, and then there's some different wording used, that's all.
Okay, so it's all the same, but
generally a date just to work towards in the future, unless sold prior to that date, and that's all the same method of sale, which is the private treaty sale. The only other method of sale is auction.
Okay.
So when we sit down with clients, we use our experience to assess the property, look at the market at the time, and then make a call as to either one of those options. Normally, and that's why you see more auctions out at the moment, is that it is a seller's market for the right type of property. Yeah. So virtually every single house you see in a decent area would be an agent would most likely be encouraging a seller to go to auction.
Yeah.
Yeah. Where you wouldn't do that is if the vendor just doesn't want to do that. And so they don't like auction, they might have had a bad experience or something. Or the property doesn't suit it, so it might just sort of be on a main road, or might not be in a great area, or an area that not a high number of people value as much as perhaps others would.
Yeah.
And therefore you might just use the other method of sale, a private treaty.
Excellent.
Yeah.
Well, that is all for our property market update for this quarter. We'll be back in touch with you next quarter to give you another update. Thank you so much for tuning in. As always, we're here to answer your questions for buyers, sellers, property investors. We're happy to help you at Turner Real Estate and Rise High Financial Solutions. Thanks for tuning in. We'll see you again next time. Bye.
Thanks, everyone.